Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Future Consumer Limited, which has been a well destroyer ever since it touched a lifetime high of 78 and now is trading at only 10 rupees and maybe below it. So let's understand what has gone wrong with the company and why the stock has fallen so much even from those 28-30 levels that we were seeing recently. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about future consumer, here's a small request that kindly support me through Patreon. Even a $2 support on your behalf will go a long way in helping the channel to grow further. And I'll do more research on your stocks and provide you with more interesting videos. You can also go to the Patreon channel, and I have different tiers, and I'm putting up articles which are more descriptive in nature about stocks, specific sectors as well as the market. So go on and have a look at that, and you'll enjoy the read over there. So kindly support me through Patreon. Now about the company. Future Consumer was established in 1996, and it is part of the Future Group, which has a lot of companies in its ambit. They manufacture a number of food items, so they are totally a FMCG company with brands like Tasty Treat, Kara, Vroom, Himgiri, being the major brands, and they have acquired many of these brands. They have diversified into dozens of food, beauty, cosmetics, bath items, you can say toiletries, etc. And a lot of items of theirs are being sold across India in Big Bazaar. So Big Bazaar is one of its Future Group's arms, and they sell a lot of their brands, the Future Group brands there. So there is a lot of mileage that the Future consumer stocks have because of Easy Day and Bazaar outlets across India, and people have a lot of you can say memory of these kind of products, and the sale of these products have been pretty good over the last 4 or 5 years, except for the last 2 3 quarters. The market cap is now under 3,000 crore. I think it is less than 2,000 crore now, with the kind of selling we have seen in the stock in the last 2 3 weeks. It has the backing of the Kishore Bayani and the Future Group, as I mentioned, but still the stock is falling like nine pins and is in about to be in single digits. If you look at the financials of the company, for the first time in probably many quarters, the sales have come down lower than what it was in the quarter in the last year. So this is FY20 December versus FY19 December, and we have seen a fall of over 7% in sales, and the profit from being 28 lakhs last time around, it is now a loss of 8.1 crores. And I want to mention one thing is that the company is in severe losses on the consolidated front, even though they are selling a lot and the sales numbers were growing, yet the numbers on the bottom line were falling. They were doing sales of close to 3,000 crore, 3,500 crore yearly, and yet on the bottom line the profit were down, and this was because of the high debt. The debt on the consumer business is extremely huge, and due to that, for instance, they were making profits of 25-30 crores on on a quarterly basis. They were making profit of 23-25 crores quarterly on the operating front, yet after paying interest the eventual bottom line number was something like 7 or 8 crore losses. So one has to understand this, that high interest cost has really taken a toll on Future Consumer. There is a share of associates which also takes companies into losses. So even after paying the interest cost, they were having profits of 2 3 crores, and yet there were associates, and these associates are the acquisitions that Future Consumer has done over the years, and there have been a number of acquisitions, at least a dozen to 18 20 acquisitions that the company has done over the last 2 to 3 years. And what that has meant is that those acquisitions are not quite giving them profits and not quite break even. So those are giving losses. So eventually what had happened is that share of associates were giving heavy losses, and eventual profit numbers were in negative. The return on equity is around minus 1% nearly now, and the operating profit margin is around 3%. And that's what I'm saying, that on the operating front the company was doing profits, yet on the bottom line, on the net profit front, the company is doing heavy losses. The performance of the stock performed well between 2016 and 18. In that big bull run of the small cap stocks, the stock really performed well, and we had a situation in which the stock went up from around 19 rupees all the way to 77, 78 rupees, and then the decline started to happen from January 2018. It has fallen more than 84, 85% since Jan 2018 highs. Numbers have been under pressure. In fact, they have been under pressure during that period of 2016 to 18, but the management commentary was backed by Kishore Bayani's words that we will do things for the investors, etc. And it looked like the company would come out of losses, and they'll be a bit positive. They'll be positive on the, although they are a bit positive, but they'll be positive on the net profit front, on the consolidated numbers. And one thing I want to tell you more about this stock is that on the standalone numbers they were doing good profits, but in the last 2 quarters even that has come into losses. And these are the things that have spooked the markets. These are the things that have really taken a toll on the market. High debt is eating into the company, and I have not written one point, and that is extremely crucial, is that the company is having, or the stock is having, 61% pledged shares. So the number of pledged shares were more than 70, 75% earlier. It is having 61% shares which are pledged, and probably that has really helped the decline, or that has accelerated the decline, which was around the decline was when the stock was trading at 25, 26 rupees. It has just suddenly gone to 10 rupees now. Probably it is because of the pledging of shares, and maybe those pledges are getting sold because of the amount of loans that Future Consumer has taken all across the board. Sales growth is also getting adversely affected, as I have just mentioned, that the sales were continually growing at 20, 25, even 40% earlier, but now the sales have slumped by 7, 8%, and it has been in losses, as I said, in the consolidated terms for the last 5, 6 years. So what has been wrong of the company? The competition from other marquee brands, say NHUL, a Dabur, a Colgate, and other say food grain products, even local brands. There's heavy competition, and even though Future Consumer has tried hard to get into the biscuit business, to get into the cereals business, to get into the business of selling bath products or toiletries, etc., they are not quite able to eat into the market cap of other individuals or other individual companies which are established brands. Interest cost has really hurt the company, so ballooning interest cost is another factor, and this has not got reduced, even though the management has talked about reducing debt and getting debt to zero and everything else. But the debt has always remained, and it is around 600 crores, 500, 600 crores of debt. For a company doing sales of 3000 crores is a lot, and that would be amounting to, or even 4000 crores. So if you're doing a sales growth of 3600 crores, and then you have a 600 crore debt, that is one sixth of your sales for the year. So that is huge. Unsustainable acquisitions, a lot of acquisitions a company has done. So the Future Group has done acquisitions of at least 12, 15 companies that I remember in the last 3 to 4 years, even more. So I'm really understating the number of acquisitions, and probably they are not able to sustain with those acquisitions and make them profitable and doing more acquisitions at the same time. So unsustainable acquisitions is the one point that I was making. After that, you look at the commentary of the management over the last 2 3 years, they have always said that they'll do things for the shareholders after having established the brands at such a level. And I must say that Kishore Bayani has established Future Group as a brand all across India. But that's what he did during 2003 to 2006 period. But eventually, a lot of its their businesses, if you remember at that point of time, pantaloons etc., had to bear a lot of losses during the 2008 to 10 period when the economic slump happened. And he made a lot of unsustainable acquisitions at that point of time. A lot of debt he had taken in, and probably he has made the same mistake here. I don't know, but the thing is the debt is not reducing. And for a consumption company that Future Consumer is, they should be having no more than 10 20 crores of debt, or probably they should be debt free altogether. And so we were of the opinion, or many investors were of the opinion. I have also invested into the stock earlier and sold in losses, I must confess that. But we all as investors earlier were of the opinion that Kishore Bayani would do things for the company, for the investors, and the amount of debt on the company would come down to zero, or the debt would come down a lot, and company would produce profits on the consolidated basis. After all, what the investors or the shareholders or even the people in the markets want is that the company to do a lot of things in order to have profits on the bottom line as well, not just producing very good sales numbers. So those things did not take place, and that's why probably the selling in the stock in such a scenario. Look at even the marquee stocks like Nestle, Dabur, HUL. You look at a Reliance, and HDFC Bank, these are not being spared. So companies with high debt will never be spared at this point of time, along with the pledges that the company has. So there's heavy pledging. There's a pledging of around 61% of the shares, and that is also extremely unnerving for somebody who wants to invest in a consumer company. That if that company has a lot of pledges, then people would not like to look at it, because they'll have other options to get into, working at very low margins. But that happens with all the pure FMCG companies, that the margins are low, but what they do is they try to gain more market share. And I want to add one more thing, that the company Future Consumer also did a lot of discounting across the board in order to beef up sales. But what happened because of that is that the margins get hit. So the bottom line gets hit, and you'll make lesser profits if you're doing a lot of discounting. Yes, your sales would go up, but eventually your margins would be hit uh, a lot. So these are probably the reasons that I think of. You can write in the comment box as to what are the reasons that you think of is because of which Future Consumer is at rupees 10. So what needs to be done? Avoid at all levels, even if this goes to 30, 40, 50 rupees, avoid at all levels. Can only trade you can only trade in such stocks. So if these stocks, if you are able to understand the levels, then probably trade on it for a 30 40% bounce back, 20% bounce back. But do not invest into the stock unless the debt comes down. Unless that debt comes to 100 crores or less than 100 crores, they are doing a lot of things for debt. Unless they show a couple of quarters of profits on the bottom line without any extraordinary, don't get into a company. You have many options across the sectors in which companies are debt free, companies are pledge free, and you can invest into it. I made a lot of videos with regard to the same, and you can look at those videos of multi-baggers picks that I picked. In those companies there is no debt or pledging, although those companies have also not done well and have been battered out of shape in the last 1.5 months or so, 1 month. But yet they are better off than something like Future Consumer. uh, this is a prime example of what not to buy. So instead of thinking, I keep on saying that buy this company, this could be a multi-bagger, or that could be a multi-bagger, and this is a very good stock to invest in. Look at Future Consumer as an example of a company that you need to avoid. So these are the things that if a company has or a stock has, you need to completely avoid it and do not get into it. So this is a template for that. So this was my video on future consumer. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.